Hello viewers, welcome back to my channel. So in today's session we are going to discuss another topic from the chapter Basics of Partnership Accounting, that is calculating interest on capital. Okay, so we'll start by its meaning. So interest on capital refers to certain amount to be paid by the firm to the partners for the investment of capital made by them. See, first of all, it refers to certain amount. Okay, so the amount which the firm has to pay to its partner. So why the firm has to pay? For the investment of capital made by them. Made by them in the sense by partners. See, whenever certain partners start a partnership firm, then they have to invest certain capital, right? So the firm, it is the duty of the firm to pay certain amount as the interest of capital to the partners at the year ending. Okay, so this interest can be of any rate. For example, this could be 6% of capital, or it could be 8% of capital, right? So assume that if the capital of a partner is 100 rupees, then it is the duty of the firm to pay the interest for around like 6 or 8%. So 6% on 100 is 6 rupees, right? And 8% on 100 is 8 rupees. So the firm has to pay 6 or 8 rupees at the end of the year to the partners. Okay, so this is called as interest on capital, right? Next, now there are certain points that we need to remember while calculating the interest on capital. Okay, so first point is the rate of interest on capital is to be provided as mentioned in the partnership deed. Now the rate of interest, see, as I told you, 6% or 8%, or it could be even 12%. So this is called as rate of interest. Okay, so this much of percentage on the capital needs to be provided, and this will be mentioned in the partnership deed. So the firm has to pay the rate of interest as per mentioned in the partnership deed. Okay, next, no interest on capital is to be given to any partner in the absence of partnership deed. Now if in case the partnership deed is silent, it means that there is no partnership deed between the partners. In that case, the firm need not pay any interest on capital to the partners. Okay, then the interest on capital will not be paid to the partners. Okay, this is an important point that you need to remember. Okay, next, interest on capital is paid at the end of the year out of the profits earned by the firm. Now there are 2 points in this. Interest on capital is always paid at the end of the year. Okay, not in the middle of the year, right? And it is paid out of the profits that are earned by the firm. See, at the end we will calculate our net profits, right? So the interest will be paid out of these profits itself. Okay, any extra or other amount will not be paid. Out of these profits, the interest on capital will be paid to the partners. Okay, next, interest on capital is always calculated on the opening capital and additional capital, if any, investment made by the partner during the year. So we need to remember that interest on capital is always calculated on the opening capital. Okay, not on the closing capital, right? Along with opening capital, if there is additional capital investment made by the partner, then even on that we need to calculate the interest on capital. Okay, so are you clear up to here? So up to here we have discussed what is interest on capital, right? Now let us discuss how to calculate interest on capital. Okay, so there could be 2 cases for calculating the interest on capital, right? So first we will discuss both the cases, then we will solve one problem each on both of these cases. Okay, so the first case is when opening capital is given in the question. So as I told you, always the interest on capital is calculated on the opening capital, right? So it is very important that we know what is the opening capital of the partners, right? So this is the case when the opening capital is directly given in the question, right? So in this case the process is very easy, right? So first of all, what we have to do, we have to calculate the rate of interest. For example, here the rate is 8% and we know the opening capital. So we have to calculate 8% on opening capital, then we'll get certain amount. Okay, in that we have to add the interest on additional capital. Now again we know the additional capital, it will be given in the question. Then again we have to calculate 8% on interest on additional capital, right? Again we'll get some amount. Okay, then we have to add both of these. Okay, because this is an additional capital, right? So we have to add it. Okay, next, if there are any drawings given in the question, if there are any drawings made by the partner, then you have to again deduct 8% on drawings. Now this we need to deduct from this. Okay, from this amount. Okay, then at last we'll get some amount that we can call it as total interest on capital, right? So here we just need to remember that we have to add the additional capital and we have to deduct the drawings from the opening capital. Okay, then at last we'll get the interest on capital at the year ending, which the firm has to pay to its partner. Okay, so this is the first case. Now the second case is when opening capital is not given in the question. See, as I told you, opening capital is very important, right? But if in case it is not given in the question, our first step will be to find out opening capital, right? So in order to find out opening capital, this is the process. Okay, so this I would like to explain you with the help of a balance sheet. So I hope you remember what is a balance sheet, right? In class 11th you must have learnt it, right? So assume that this is a balance sheet. So on the liability side we will always start with capital, right? So this we can call it as opening capital. Okay, then in this we will add net profits for the year, right? So the net profit which we have ascertained from the profit and loss account, we will add it, right? Then if there are any drawings, we will deduct from the opening capital, right? Drawings, so we deduct it. Then if there is any additional capital, again we will add it, additional capital, right? At last we will get the amount that we call it as closing capital, right? So this is the opening capital and this is the closing capital. This is what we do in the balance sheet, right? So here if in case opening capital is not given and we have to find out the opening capital, we have to use this balance sheet. Okay, see, first of all what we have to do, capital at the end of the year or closing capital will be given in the question. Okay, so now this figure is present in the question. Now we need to find out this. So first of all take this amount, closing capital amount, then in this add drawings. See, here we have deducted the drawings, right? So just do reverse of this. So out of this add the drawings. Here we have deducted, here we can add it. Okay, then we have added the net profit here. So here we need to deduct it, profit from profit and loss account. So if in case there was loss, then we have to add it. Okay, profit must be deducted and loss must be added. Okay, next additional capital was added, again here we need to deduct. Okay, so at last we will get a certain amount that we can call it as opening capital. Okay, then what rate of interest is given in the question, we just have to calculate its rate on this capital and we will get the interest on capital at the year ending. So both the methods are simple, right? Now we will solve problems on each method. So here is problem number 1. Saloni and Shruti are partners in a firm. Their capital accounts as on April 1st, 2015 showed a balance of rupees 2 lakh and rupees 3 lakh respectively. So there are two partners in this firm named as Saloni and Shruti. Okay, so the capital are given. Capital is on 1st of April 2015. It means that this is the opening capital, right? Because 1st April is the first day of the financial year, right? So opening capital is given in the question, right? So here we'll make a summary. Remember, whenever the question is in this paragraph format, it will be very easy if you make the summary. Okay, so capital of Saloni and Shruti. Okay, so capital of Saloni is rupees 2 lakhs and Shruti rupees 3 lakhs. Okay, on 1st of July 2015, Saloni introduced additional capital of rupees 50,000 and Shruti rupees 60,000. See, here the date is very important. On 1st of July, additional capital have been introduced by both the partners. Okay, so additional capital on 1st July here again it's 1st July, right? So additional capital of Saloni is rupees 50,000 and Shruti is rupees 60,000, right? Next, on October 1st, 2015, Saloni withdrew rupees 30,000 and on January 1st, 2016, Shruti withdrew rupees 15,000. See, here the drawings are made by both the partners but on different dates, right? Again here the dates become very important, right? So we can write it as drawings of Saloni are on 1st of October, right? So the drawings made by Saloni are rupees 30,000, okay, 30,000, and drawings made by Shruti was on 1st of January, and amount of drawings is rupees 15,000, okay, so 15,000. So interest is allowed at 8% per annum, okay, so we can write it as rate of interest is 8% for both the partners, right? Now calculate interest payable on capital to both the partners during the financial year 2015 and 16, right? So now we have summary with us. Now we just have to calculate the interest on capital, okay? So here first of all we know that we have to calculate interest on opening capital, right? So in the date column we can mention the date first. Opening capital will always be on the first date, right? So 1st of April. So interest on opening capital. So we know that the rate of interest is 8%, right? Now what we have to do, we know the capital amount. Capital of Saloni is rupees 2 lakhs. So write it as 2 lakhs into 8% of this. Clear? Next, the capital of Shruti is rupees 3 lakhs and again 8% of this. Okay, so is that clear? Now 8% of rupees 2 lakh will be rupees 16,000 and 8% of 3 lakh will be rupees 24,000. Okay, so just we have to mention the amount of interest in the amount column. Remember, do not take the full amount of capital here because this is the capital and here we are just finding out the interest on capital. So interest on rupees 2 lakh is rupees 16,000 for Saloni and rupees 24,000 for Shruti. Okay, clear? Next, what we have to do, we have to add the additional capital. Here the dates are important. Okay, so we can add interest on additional capital. Date is 1st of July, right? Now additional capital of Saloni is rupees 50,000 and Shruti rupees 60,000, right? So what we have to do, rupees 50,000, so 8% on this, and here the month is important, right? We have to pay interest on additional capital only from July to March. Okay, so from July to March it's only 9 months, right? So we need not pay interest for 12 months because the capital was introduced in the month of July. So from July to March it is 9 months. So what we have to do, we can do it as 9 divided by 12. Okay, so same for Shruti, rupees 60,000 is the additional capital and 8% of that, and for 9 months, right? So the here the amounts will be for Saloni it is rupees 3,000 and for Shruti rupees 3,600. Okay, so now what we can do, we can add both of these amounts. So here it's 19,000 and here in this side it is 27,600. Okay, next we have to deduct the drawings now. Okay, so the date of drawings is different for both the partners, right? So drawings of Saloni were made on 1st of October. So here what we can do, on 1st of October drawings of Saloni are rupees 30,000, right? So again 8% on that, and from October to March it is only 6 months, right? So 6 divided by 12. Okay, so its amount I am going to write here. So the amount here would be rupees 1200, and for Shruti, so the drawings of Shruti is rupees 15,000 and 8% of that. Now the date is on 1st of Jan, right? From January to April, from January to March it is only 3 months, right? So 3 divided by 12. Okay, so here the amount would be rupees 300. Now we have to deduct these drawings. Okay, so when we deduct 1200 from 19,000, we get the amount rupees 17,800, right? And here 27,300. Okay, so this we can call it as interest on capital at the end of the year. Okay, so this is how we solve the we find out the interest on capital in the first case when the additional capital is given in the question. Okay, let's solve problem number 2. So Josh and Krish are partners sharing profits and losses in the ratio of 3:1. So here in this question, profit sharing ratio of the partners is given. In the previous question it was not given because it was not needed. Okay, so the capital at the end of the year 2016 were rupees 1,50,000 and rupees 75,000 respectively. See, here we need to see that the capital is given at the end of the year. So end of the year, it means that this is the closing capital which is given in the question. Okay, so don't confuse it with opening capital, right? Opening capital will always be at the beginning of the year or first day of the year, right? Next, so we'll make the summary again. So closing capital of Josh and Krish. So closing capital of Josh is rupees 1,50,000 and Krish rupees 75,000. Okay. Next, during the year 2015 and 16, Josh's drawings were rupees 20,000 and drawings of Krish were rupees 5,000. So drawings are given. Drawings of Josh are rupees 20,000 and Krish rupees 5,000. Okay. Next, profit before charging interest on capital for the year is rupees 16,000. See, here only single amount of profit is given, right? Now we have to divide this profit between both the partners, right? And the profit sharing ratio of the partners is given in the question, right? Now we have to divide this profit between both of them. So we already know how to divide it, right? So if in case you don't know, you have a look at here. Okay, so 3 plus 1 is 4, right? So it means that if our capital is this and if it is divided into 4 parts, okay, so 3 parts belongs to Josh because the profit sharing ratio of Josh is 3, right? So 3 parts we can say that they belong to Josh and 1 part belongs to Krish, right? Now how will we divide this profit according to the ratio? So we can write it as profit. So total profit is 16,000, right? And the share of Josh is 3 parts, right? So we can write it as 3 divided by 4. So out of 4 parts, 3 belongs to Krish, right? So here the amount would be rupees 12,000. So it means that out of 16,000 rupees, 12,000 is the profit for Josh, and again for Krish, rupees 16,000 is the total profit, and his share is 1 out of 4 parts. So here the answer would be rupees 4,000, right? So when you total both of these, you should get the amount rupees 16,000. Okay, clear? Now profit of Josh is 12,000 and profit of Krish is rupees 4,000. Okay, next, Krish had brought additional capital of rupees 16,000. See, only Krish has brought the additional capital. Josh has not brought any additional capital. So we can write it as additional capital for Josh is nil and for Krish is rupees 16,000. Okay, next. Date is given on October 1st, 2015. So this was brought on 1st October 2015. Sorry. Okay. Calculate interest on capital at 12% per annum. So rate of interest is 12% per annum. Okay. Now this is the summary of the question. Now let's find out the opening capital first, because opening capital is not given in the question, right? And we know how to do it. So first we have to take the amount of closing capital here, right? And closing capital will always be at the year end. So 31st of March. Closing capital. So closing capital is given in the question, right? See. Rupees 1,50,000 and 75,000. So we can mention it here. And rupees 75,000. Okay. Then what we need to do? We need to add the drawings. Okay. So drawings are 20,000 and 5,000. So 20,000 and 5,000. So when we add both of these amounts, we get rupees 1,70,000 and rupees 80,000. Right? Next, sorry, here drawings, add drawings. Okay, next, see here any particular date for drawings is not mentioned, so we are not writing any date here. Okay, next, what we have to do, we have to deduct the profit of the partners. Right, now we have calculated the profit, so we can deduct it, rupees 12,000 and rupees 4,000. So 12,000 and 4,000. Okay, again we have to deduct the additional capital. Right, now date for additional capital is 1st of October. Okay, and profit will be again on the end of the year, so 31st March. Okay, so the additional capital is nil for Josh and rupees 16,000 for Krish. Right, so when we deduct profit and additional capital from this amount, we get the amount of rupees 1,58,000 for Josh and rupees 60,000 for Krish. Right, so this we can call it as opening capital. Okay, now the problem does not end here. Okay, so this is just the opening capital that we have found out. Now we have to calculate the interest on drawings. Right, interest on capital. Right, so interest on capital for Josh. So opening capital of Josh is rupees 1,58,000 into 12% of that. Right, so because the rate of interest given in the question is rupees 12. Right, okay, so 12% of 1,58,000 would be rupees 18,960. Okay, now interest on capital for Krish. So opening capital of Krish is rupees 60,000. Right, and 12% of rupees 60,000, and see the additional capital was introduced on 1st of October. Right, so from October to March it is 6 months. Right, so 6 divided by 12. So here the amount would be, sorry, first of all let's find out the interest on opening capital here. Right, opening capital, so 60,000 into 12 divided by 100 would be rupees 7,200. Next, interest, now we have to add this interest on additional capital. So additional capital of Krish is rupees 16,000. Right, so 16,000 into 12 divided by 100. So it was introduced on 1st of October. So from October to March it is 6 months. So 6 divided by 12. Now it would be rupees 960. Right, so when we add rupees 7,200 and rupees 960, we get the amount of rupees 8,160. Okay, so this is the interest on capital of Krish and this is the interest on capital of Josh. Clear? So this is how we calculate the interest on capital in both the cases. Okay, so in the next session we will discuss about calculating the interest on drawings. Okay guys, so this was all about today. If you found this helpful, please hit the like button. Also subscribe to my channel. You can ask me any doubts in the comment section below. Hope to see you in my next video. Till that, happy learning.